What is going on, guys? Welcome to another market update. As usual, let's get straight to the charts. So as expected in the last video on the Quantonomy channel, we did end up continuing with our uptrend, and Bitcoin even managed to take out our previous high at 117.3k. But of course, Bitcoin does not want to make things too easy for us, and the over-leveraged bulls need to be periodically wiped out to get that liquidity needed to continue moving higher. Understandably, this type of seesaw price action is incredibly frustrating if you are too emotionally invested, especially now that altcoin season is in full swing. After all kinds of garbage meme coins are exploding left and right. So why is Bitcoin being so lame? Well, as usual, context is key. These other coins were getting destroyed, especially against Bitcoin, for 3 years straight, while Bitcoin was methodically grinding higher and dominating the market. We have now arrived at that last easy money phase of the market cycle where altcoins finally have their long-awaited moment in the spotlight. So give them a break because this phase never lasts long. Bitcoin will eventually come out of this consolidation zone for that final push to the upside, where the biggest and fastest gains have historically been made. But of course nothing is guaranteed now that Bitcoin is such a lumbering giant. Now let's look at some other charts and indicators to find some more clarity. Let's start with the DXY versus Bitcoin. Most of you guys know my take on this. I do think that the dollar will continue dropping here in the coming months, and there are some underlying inflation risks as well that are being exacerbated by Trump's tariff policy. So this is not very good for the dollar. Right now, Bitcoin has still not taken out its previous all-time high, so the dollar is able to consolidate here. But as you all know, liquidity is actually increasing, so that doesn't bode very well for the dollar either. Let's have a quick look at the CME as well. It currently closed at roughly 115,000, and Bitcoin's price during the weekend seems to be hovering at 116k or so. So there's a possibility that we could actually drop a little bit lower, so that we could actually match the CME price next week, but who knows. Next, the unemployment rate is looking a little bit worrying because this kind of looks like a breakout pattern over here. We were hovering around these levels over here, and it really is trying to take out this previous high. If we actually manage to do that and the unemployment rate goes closer to 5%, then that would be a huge warning sign for the Feds. Obviously, it's their job to avoid this at all costs, but they almost never succeed at this. This brings us to the next topic, which is the federal funds rate. And the Fed really is caught between a rock and a hard place because they're not able to lower the federal funds rate as fast as they'd like to because of ongoing inflation risks. Therefore, people are accounting for a slower rate cut cycle. And this kind of plays into our hands because a very aggressive rate cut cycle would probably mean an impending market crash because the Fed would be in a panic and they would need to aggressively lower rates in order to stabilize the economy. The fact that they don't have to do this right now probably means that things are not too bad yet. But at the same time, keeping the rates elevated weakens the economy, which paradoxically actually brings us closer to a potential recession. So as I said, there is no real solution here. This whole system is stupid. One thing's for sure, however, the US cannot keep these interest rates elevated for too long because they also need to pay off their own debt. And the only way they can do this is by literally printing away the debt, which means that we need to stay bullish on Bitcoin for the next years as the dollar keeps getting debased. Now, let's look at some news. So the ETF Mania is currently all the rage. As mentioned in previous videos, it seems that this is one of the main driving factors of the alt season and general crypto boom of this cycle. In the 2017 bubble, Ethereum-based ERC20 tokens were all the rage. Then we had the ridiculous NFT mania that peaked in 2021, which was the main narrative of that cycle. And now it looks like we're back to altcoins with a twist because it's all about the meme coin ETFs now, with some institutional adoption and crypto reserve goodness sprinkled on top. Price drives innovation and hopes of further innovation pumps the price further until investors come back down to reality. It happens every cycle. So now that Bitcoin and Ethereum ETFs are old news, we have investors flocking to the new XRP ETF. They're even going to have CME futures launching on October 13th. But wait, there's more. Dogecoin ETFs launched together with XRP and smashed previous records with a day one volume of $54.7 million. The successful start to these two ETFs follows the Securities and Exchange Commission's decision to approve a new streamlined listing standard for crypto ETFs, reducing approval from 240 to only 75 days. Obviously, if you have paid attention to what has happened in the past, then you know that these things usually turn out to be sell the news events, if not immediately, at least in the near future. This gives us further evidence that we're getting closer to the top. I'd also like to mention that the ongoing op return war between Bitcoin Core and Bitcoin Knots is picking up steam. Michael Saylor recently spoke on this issue and had some very good points.
Bitcoin is an ideology first, right? Sovereignty, freedom, sound money, liberty, integrity, natural law, respect for physics, right? All of those things, humility. And then on that ideology, Satoshi created a protocol. You know, there's a lot of different protocols you could have created. You could have had the thing run every 8 minutes instead of every 10 minutes, and it could have been block size of this or block size that, etc. But we got a protocol that reflects that ideology. A lot of people created other protocols. They forked Bitcoin with this Bitcoin Cash and Bitcoin Satoshi Vision, all these other things. And there was a very bitter civil war, the block size war, that was fought, right? And it kind of decided the matter that the community preferred this protocol. And the other protocols were market tested, and they all failed in the market. And there's 40 million tokens launched, and every one of them has failed versus Bitcoin. So this is the protocol that we've adopted. The proposal to change the protocol, right, has to be viewed, anybody that proposes to change the protocol has to be viewed as a threat, right, to the entire community, right? So that was extreme in the block size wars, where the idea was to double the block size, or to increase the block size, or maybe perpetually increase it. And I think that was a first order change to the protocol that was not well understood by the people that supported the change. And I think that the late debate, this debate we see right now over op return limits, this is actually a second order, or maybe even a third order change. It's not it's not changing the amount of Bitcoin, which of course is an atomic zero order change. It's not changing the block size, which is a first order change. It's somewhere in the second and a half to third order. But the reaction of the community, which is, to reject it, an inflammatory reaction, I thought was a healthy response. It's healthy to be skeptical of a third order change to the protocol, right? Because it might become a second order change, and and if it's a first order change, it puts everything at risk. And the biggest danger is a very talented, well-funded, well-intentioned developer trying to do something good. That's the danger. I've said this tongue-in-cheek before in my long business career. I don't regret my bad ideas, because no one's stupid enough to pursue their bad ideas. I regret all of the good ideas that I pursued to the detriment of my great idea. Like, it's the good ideas that actually dilute the product, dilute the brand, dilute the network, and destroy the company. The good ideas will destroy the company. The good idea for Bitcoin will destroy Bitcoin. If I wanted to destroy Bitcoin, I would just fund infinite developers who are very talented and tell them to make it better.
I'm sure many developers are very familiar with the fact that feature creep can completely destroy a once great product. It's even worse for a commodity and financial network like Bitcoin, where everyone's money is on the line. Bitcoin Core is no longer working for Bitcoiners and think they're untouchable. It is completely absurd that they're still pursuing changes that are so controversial and hated in the community. The good thing is that Bitcoin Nuts has recently reached 20% of total nodes, but obviously we still have a lot of work left to do. Let's get back to the charts now. So we now know beyond a shadow of a doubt that the money supply has put in new highs, which is obviously very good news for Bitcoin, and I do think Bitcoin will eventually catch up to the money supply. For now, there are no signs of an imminent downtrend over here. Next to the crypto fear and greed index, and we're currently at very neutral territory at even 48 below 50, which is actually very good news because I don't see any evidence that the top is in at this point. This simply doesn't look like topping behavior in terms of the fear and greed. As you can see, we've been putting in lower highs here while Bitcoin has been putting higher highs. To actually get to bubble territory, I think we need to go at least into the 80s or so. As you can see, interest in Bitcoin and crypto in general has also dropped off a cliff over here. It's at completely ridiculous levels. So we have tons of room to the upside if we wanted to go back up. When looking at Bitcoin dominance, then we can see that it's continuing to drop, and I do think it will continue to drop for at least a little while longer, maybe 1 or 2 months. But obviously I do think that the bottom of this cycle will be significantly higher than the previous ones over here, which just shows that people are trusting Bitcoin more, and the influence of other altcoins is actually dropping over time. When looking at ETH BTC, then it's still continuing to consolidate over here, but I do think it will have some sort of last hurrah and perhaps reach at least 0.049 or so. That's kind of the main resistance level I'm looking at. Solana is also performing very strongly. It's kind of the main competitor to Ethereum, and it seems like it's currently Solana's turn. But it's going to be difficult for Solana to even take out this high here put in 2021. So the question is, why even buy it if it will not outperform Bitcoin in the long term? The S&P is also consistently putting in new highs, so this is just a signal for Bitcoin to pump as well, in my opinion. Alright, let's wrap things up. So let's look at the moving averages, and we're currently above all key moving averages. So even though we're dumping here, it's nothing special. There's this huge cluster of moving averages, and hopefully we won't go below this cluster. And we might even be forming some sort of inverse head and shoulders over here, which would be obviously very bullish. And as you can see, we continue respecting this straight line over here, and we didn't even end up touching it this time, and I don't think we will end up retesting this in the coming months, at least until the bear market. I know it's very frustrating right now. All kinds of meme coins are pumping and Bitcoin is still struggling to even come close to its all-time high, but I do think this will change soon and we will end up having that last leg of the bull market. The most important thing is to have a plan in place because you don't want to be caught with your pants down. Obviously, if you're a hodler, then maybe you have to adjust your strategy, buy less Bitcoin right now and buy more when it's cheaper again. But if you do plan on selling Bitcoin, then have some kind of plan in place. I will also tell you when I'm planning to sell, but we're not close to that level yet. Make sure to like, comment, and subscribe. I really appreciate all of your feedback. This is Saverio speaking, and as always, thanks for watching. You guys know my stance on the importance of self-custody. However, there are situations where you need to use an exchange for trading or as a crypto on and off ramp. There are also plenty of people who should still reap the benefits of owning Bitcoin, even if they don't have the technical expertise required for self-custody or exchange-based trading. This is where today's sponsor, Caleb & Brown, comes in. There's nothing more infuriating than having your money stuck on an exchange and being met with an AI chatbot instead of real customer support, which is often lacking as exchanges try to cut costs. Caleb & Brown, based in Australia, solves these problems by storing your crypto in cold storage, eliminating hidden fees, and assigning you a dedicated broker to assist you personally. You can even call your broker to execute a trade for you while you're relaxing on a beach. That's how easy it is to use Caleb & Brown's services. Use the referral link in the description to sign up now.